morning, ladies and gentlemen. Welcome to Orbite Aluminae's fiscal 2013 and fourth quarter results conference call. Before we begin, I'd like to remind everyone that certain matters discussed in today's conference call or answers that may be given to questions asked could constitute forward-looking statements that are subject to risks and uncertainties relating to Orbite's future, operational results, or business performance. Actual results could differ materially from those anticipated in these forward-looking statements. The risk factors that could affect results are summarized in Orbite's periodic results and public filings, which you can access in SEDAR's database found at www.sedar.com. Please note that Orbite disclaims any obligation to update any forward-looking statements discussed today, and investors are cautioned not to place undue reliance on these statements. At this time, all participants are in a listen-only mode. Following the presentation, we will conduct a question-and-answer session. Instructions will be provided at that time for you to queue up for questions. If anyone has any difficulties hearing the conference, please press *0 for operator assistance at any time. I would like to remind everyone that this conference call is being recorded on Monday, March 17, 2014 at 10:30 a.m. Eastern Time. I would now like to turn the meeting over to Mr. Glenn Kelly, President and Chief Executive Officer. Please go ahead, Mr. Kelly.
Thank you. Good morning, everyone, and thank you for joining us on the call today. Considering that most of our shareholders, analysts, and brokers are English-speaking, the management presentation will be held in English only. Questions, however, will be answered in the language of the question. A transcript of this call will be available in English and French on our website this coming Wednesday, and a recording of the webcast will also be available on our site today. Considérant que la plupart de nos actionnaires, analystes et analystes sont de la langue anglaise, la présentation de la direction sera tenue en anglais, tandis que les questions seront répondues dans la langue de la question. La retranscription écrite de l'appel sera disponible sur le site d'Orbite, en français et en anglais à partir de mercredi, tandis que l'enregistrement de l'appel sera aussi disponible sur notre site après l'appel. S'il vous plaît, notez que la discussion de ce matin peut inclure de l'information prospective. Les énoncés prospectifs ne sauraient être interprétés comme une garantie de rendement ou de résultats futurs et sont assujettis à des risques connus ou inconnus, à des incertitudes, à des hypothèses et à d'autres facteurs imprévisibles indépendants de la volonté de la société. Orbite n'a pas l'intention de mettre à jour l'information et les énoncés prospectifs et sur lesquels nous vous suggérons ne pas porter une confiance excessive. This is the first of what we intend to be a quarterly event to update the market and our financials and operational progress. This is also my first conference call as the new CEO of Orbite. With me on this call is Jacques Bédard, our CFO. Today's call is divided into three parts. I will start with an operational review of the year, following which Jacques will discuss the financials. I will then return to provide an update on the status of our HPA project and our outlook. 2013 was a challenging year for us, but also a year of accomplishments and positive change. I believe we have made great strides in meeting our challenges, and Orbite is now in a much better position than it was a year ago. When I joined the company as COO in June of last year, Orbite was faced with delays and cost overruns on the construction of its HPA plant, a calcinator that did not deliver to spec, funds that were running low, and an organization that was relatively top-heavy. Orbite was pursuing a large number of opportunities simultaneously, and as a result, and I think it's fair to say, the company had lost its focus and control on immediate deliverables. At the time, Orbite was very much a technology development company. We had to change that and also add commercialization to our skill set. This is a significant culture shift and one that many companies find very difficult. I was mandated with effecting this transformation, and today we are beginning to deliver and are well on our way towards meeting our objectives. So when I first set to work, we first divided the areas where our technology can be applied into three differing segments. First, high-margin specialty products, such as high-purity alumina. Second, environmental remediation, such as red mud remediation, fly ash remediation, and potentially mine tailings remediation. And finally, commodity products, such as smelter-grade alumina. The margins, economic drivers, barriers to entry, and time to market are very different in each one of these segments. We then set priorities as to how we were going to attack each one of these opportunities, outlining a step-by-step and focused approach. We also, as you know, implemented a rigorous cost control program. Going forward, we have thus divided our initiatives into short-term, mid-term, and mid to longer-term priorities, which are the high-purity alumina, red mud and fly ash remediation, and smelter-grade alumina initiatives, respectively. Let me be clear here. This prioritization does not in any way reflect a decrease in interest in any of these sectors. Rather, it reflects our evaluation of time and speed to commerciality. Our main priority and current focus is to bring our HPA plant to commercial production. We provided the market with a revised timeline and cost estimate for the upgrade of the HPA plant to a 3-ton per day facility, a plan that called for the investment of an additional $28.5 million. Part of this revised estimate relates to the calcination unit. I want to stress that the issue we encountered was equipment and not process related. Calcination, although an important part of the overall process, actually is a back-end operation. It is not the core of the purification process, which, as we have proven, functions well. We identified what caused the issue and have selected a different supplier and type of calcinator design that we are confident will yield a consistent supply of HPA. As I will explain later, this confidence is based not only on design, but also on extensive pilot testing with our supplier. As a result of the calcinator issue, we're able to produce HPA on a limited basis and at relatively low output. However, during the year, we were able to use this output and send off a number of forend samples to potential customers. Initial feedback has been positive, and we have successfully produced densified and spheronized HPA for additional shipments to a prospective client that was satisfied with this initial product quality. When I joined Orbite last year, we were entering into a financing mode. Although the climate for raising funds in the second half of the year proved tough, we were able to secure funding and are now capitalized for the execution of our investment and development plan. We closed a prospectus offering for $16 million and received a binding commitment from a U.S. institutional investor for up to an additional $40 million. Subsequent to year-end, we further strengthened our financial position with $4 million from the federal government and another $10 million from Investissement Québec. The latter followed a very comprehensive third-party due diligence on the HPA plant technology and economics, which we consider an important validation of what we are doing. Some of the other important developments during 2013 were the signing of an exclusive collaborative agreement with Veolia Environmental Services on the remediation of red mud. I will discuss this in more detail a little later. Peter Cosgrove, Pascal Descaries, and Claude Lamoureux were appointed to our board of directors. With these appointments, we have significantly strengthened our corporate governance, as well as deepened the financial and operational expertise of the board. The signing of a binding offtake agreement with Glencore for the purchase of 100% of the production of our proposed SGA plant in Quebec. We're pleased with this agreement, as it provides another level of recognition and validation for the potential of our technology. Furthermore, Glencore is a solid partner and one we look forward to broadening our relationship with once we start pursuing the SGA opportunity. Finally, we made a number of changes to the management team to make the company more agile and better structured. So, to summarize, despite significant challenges, we are now well capitalized and executing on our main priorities. We believe that following a transformative year, we have turned the corner and are in a very good position to create greater shareholder value with our technology. That concludes my review of the year, and I will now hand the call over to Jacques.
Thank you, Glenn, and welcome everyone to today's conference call. As we are a pre-revenue company, I will focus mainly on those areas we consider most relevant in assessing the financial health of a company at our stage of development, namely our cash balance, liabilities, financings, and burn rate. As of December 31, 2013, we held $10.3 million in cash and short-term investments. This was down from $40.5 million as of December 31, 2012. Cash used during the year was related to investments in the construction of the HPA plant, exploration and evaluation activities related to the smelter-grade alumina project, research and development, general and administration, and HPA plant operation expenses. Cash was up from $4 million as compared to the end of the third quarter. As you know, we completed a $16 million prospectus offering on December 10th of 2013, which explains the sequential increase in our cash position. Concurrent with the closing of the prospectus offering, we announced a binding arrangement with a U.S. institutional investor for additional financing of $40 million. Details of the terms and conditions can be reviewed in our SEDAR filings. Both the prospectus offering and the arrangement with the investor are in the form of a convertible debenture. It is important to note that the facility with the investor consists of two separate elements: a first tranche of $10 million, which we are to draw down between April 10 and July 11, and the balance of $30 million. The latter can be drawn down in tranches starting in October, and it is important to note that the uptake of the $30 million facility is subject to shareholder approval. As Glenn mentioned, subsequent to year-end, we received a $4 million zero-interest loan from the federal government. The loan is repayable in 10 consecutive equal semi-installments starting 24 months following completion of the HPA facility. Additionally, Investissement Québec announced on March 3, 2014, that it will make a $10 million equity investment in Orbite. The terms and conditions will be disclosed in the coming weeks as we drive to close this financing. We are pleased with this commitment from the government of Quebec and are looking forward to having them on board as a strong and long-term shareholder participating in our exciting project in Captcha and our future development. As a result of these financing, we are able to execute on our investment plan for the completion of our HPA facility. We estimate that once completed, we will have invested a total of around $106 million in external capital costs, which includes $30 million of refundable investment tax credits. We estimate the incremental investment required to bring the plant to commercial production to be $28.5 million, of which we have spent $2.5 million to date, according to plan and within budget. We also will continue to invest in the upkeep of our concessions. In 2013, we spent a total of $1.1 million on this. We recorded a reversal of flow-through shares premium liability related to exploration. However, we also recorded a $1.7 million expense to reflect the indemnification penalty we will incur in relation to us electing to strategically spend flow-through money on working capital rather than exploration. As a result, other income decreased by $1 million for the quarter and by $1.4 million for the year. Cash used in operating activities increased by $500,000 for the quarter due to mainly to transaction costs of $3 million related to the December 2013 convertible debentures and the increase in interest paid on the 2012 debentures. This was offset partially by a decrease in non-cash working capital items. For the year, cash used in operating activities decreased by $1 million, resulting primarily from a decrease in non-cash working capital items, as well as a decrease in R&D and G&A expenses resulting from our cost control program introduced during the third quarter of 2013. For the year, our net loss decreased by $1.9 million, or 11%, to $15 million. The decrease is mainly due to a reduction in R&D expenses to reach $1.5 million, a 23% reduction in G&A charges to $8.3 million, partially offset by an increase in HPA plant operation expenses of $1.7 million and a $1.5 million increase in other expenses during the year. Net financing expense decreased by $2.2 million compared to financial year 2012. Accounts payable and accrued liabilities decreased by $23.8 million during the year, mainly as a result of the settlement agreement with certain suppliers and payment made during the year, but also due to a lower volume of purchases in the fourth quarter of 2013. So summarizing, we capitalized sufficiently to execute on our plans and have cut our costs to a more appropriate level. We are in a much better position both operationally and financially than we were a year ago and are excited about the executing of our HPA project, which we believe will turn us into a revenue generation company in January of 2015. So this concludes my comments, and I will now hand the call back to Glenn.
Thank you, Jacques. This morning, we issued a press release updating the market on our progress and schedule related to the construction of the HPA plant. As you can imagine, building a plant is a complex undertaking with many moving parts. However, we've worked diligently over the past few months, and I'm pleased to share with you that we continue to execute well against our 12-month timeline. Details of this progress can be read in the press release, but I will now provide a brief summary. First, the design review of the HPA facility. This was originally slated for completion in April 2014, but I'm pleased to state that this phase has been finalized. Second, detailed engineering. Completion of this phase was originally planned for June, but considering the progress we have made to date, we are now targeting May. Issue of procurement and construction packages for bid are slated for June, with the start of construction in July. Construction is thus expected to be materially complete by early November. As you will have read in today's press release, we have conducted extensive pilot testing on calcination with 2 prospective suppliers in Europe and Asia. Based on technical and economic analysis, we have awarded the contract to Outotec from Germany, and delivery is expected for August 2013, slightly ahead of our original schedule. Plant commissioning, including cold and hot startup, will be carried out through November and December, with commercial operations commencing in January of 2015. As part of the detailed design process, we are also presently conducting a production campaign at the HPA facility for the optimization of operating conditions that were initially determined at our Technology Development Center in Laval. Preliminary results on quality, process conditions, and productivity are extremely promising. I want to add that we had a small operating incident at our HPA facility at the end of last week. A minor equipment failure led to a small release of hydrochloric acid. No one was hurt, and there will be no material impacts on either our operations or finances. So in short, we are on track to deliver, providing us with line of sight to revenues. Obviously, in order to get the revenue generation, we need to do more than just have the plant up and running. I already mentioned that we have shipped HPA samples and have received positive feedback. We will be stepping up our commercial efforts in the second quarter of the year and aim to convert at least some of the opportunities our salespeople have identified prior to the start of production. We will also be using material from the current production campaign and future production campaigns as sample sets for prospective customers. What I've just discussed all refers to phase 1 of our plan, that is commercial production at 3 tons per day. As you probably know, we also intend to upgrade the HPA plant in 2015 to 5 tons per day. As we work through the engineering of phase 1, we are also evaluating the scope and costs of increasing the capacity to 5 tons per day. These, as already mentioned, should be reported to you in the second half of this year. In the second part of the upgrade, we also intend to convert the extraction portion of the plant to Orbite's chloride-based process, essentially version 2.0 of our technology. This has a number of benefits. First, it is more economical, and it will allow us to use a greater variety of feedstock, including aluminous clay. Secondly, it will also allow us to add an additional extraction unit for high-value elements in our feedstock, such as gallium and scandium. Thirdly, it will form the commercial proving ground for our red mud and fly ash, as well as our SGA initiatives. We also, on this front, intend to provide a cost estimate and timeline this year. In February of 2013, we signed a memorandum of understanding with Veolia for the joint development of a red mud remediation project. Bit of background here, current global stockpiles of red mud are estimated at over 3 billion tons, and each year an additional 100 million tons is being produced, of which less than 5% is reutilized. There are over 90 red mud waste stockpiles around the world. Our process intends to use the red mud as a feedstock, producing alumina and high-value byproducts, and returning only a small inert residue to the stockpile of less than 10% of the original volume. This creates a very substantial opportunity for us, and one that we intend pursuing in partnership with Veolia or other interested parties. The general intention is to jointly build an initial facility, subsequent to which we plan to license the technology globally. Currently, we are working actively with Veolia on achieving specific milestones that include the selection of the first plant, site or sites, and determining the ownership and the funding structure of our Red Mud initiative going forward. We had planned on reaching these milestones by mid-year, and we will communicate on our progress going forward. However, our primary focus remains on commercial production with our HPA plant. As indicated earlier, I believe we have truly turned the corner. We have made the necessary changes. We have the technology, we have the people, the skills, and the assets required to capitalize on our commercial opportunities. We are executing, and we have a clear path to revenues. We fully appreciate that we have to restore credibility with our shareholders and the market following some challenging times in 2013. And I hope that investors will recognize the new Orbite and how we are delivering against milestones. I believe strongly in our potential, and I look forward to updating the market frequently on our progress. That concludes our prepared remarks, and I'll now turn it over to the operator to poll participants for questions. However, due to some time constraints, we will only have time for 3 to 5 questions. Thank you.
At this time, if you'd like to ask a question, please press star, then the number 1 on your telephone keypad. We'll pause for a moment to compile the Q&A roster. Again, if you'd like to ask a question, that's star, then the number 1 on your telephone keypad. Your first question is from Claire DeJong.
Hello?
Claire DeJong, your line is open.
Glenn, good morning. It's Claire DeJong here, a retail shareholder. We have not spoken before. A couple questions for you. I guess we'll get, as you have limited time, we'll get to some of the substantial questions I had, although I actually have a number of them. I'm going to focus on the finance. Now, the previous convert had been secured against a $25 million investment tax credit, and I'm assuming it hasn't been received yet. And what are the parameters for that credit to be actually received? And the reason I ask the question is largely given the lack of faith due to the previous leadership. I'm unsure as to whether Orbite will receive that money. And then second, on the financing side, I consider the CREED financing to be a keep the lights on financing reflective of previous leadership not properly financing the company, and I find it to be very expensive. Is there a plan in place to try to replace the back end of that financing with HPA offtakes or other such financing that are less dilutive and more favorable to shareholders generally?
Well, I'll take your questions, and thank you for that, Claire. I'll take one at a time. The first one related to our debentures, or I'll call them our 2012 debentures, and your question was, have those credits been received? No, they have not. We have filed our 2012 tax return. We're working with the Quebec government, and as we have indicated, our estimate is that we would be receiving those sometime mid-year this year. And I'm looking at Jacques here, but I believe that return is for about $19.7 million.
That is correct.
I would add to that, you made a comment of some question of whether those will be received or not. I won't answer that question, but I will just add that we do have the government of Quebec as a shareholder and an important shareholder, or will have the government of Quebec as an important shareholder in the company within the next couple months, or within the following month, I should say. Your second question on the financing from CREED, you indicated that it was an expensive financing. Yes, it is. However, it has allowed us and gave us the opportunity to have the required funds in place, or have access to the required funds to complete the HPA facility. The last $30 million of the funding, which is expected or could be drawn upon in October, is subject to shareholder approval, and that means your approval. And we are always working on financing alternatives and trying to get the best cost and the least dilutive alternatives for our shareholders.
Okay, quick question then on the 25 mil convert. So I agree you won't know until you actually know, but I suspect there were criteria to make that payment eligible, and I suspect and hope that you folks indicate that you have met the criteria to expect full funding. And then just one other question, I'll get off the line. I noticed that you're not on the board of directors, and I find that very strange for a CEO not to be a member of the board of directors. Is that going to be rectified at some point in the future? Because I then question as to how the governing of Orbite is effective if the CEO is not actually a member of the board, and it goes to, I guess, what I consider to have been a near complete lack of oversight from the board of directors with the previous leadership and all of the problems that incurred that I view as largely a lack of oversight.
On your two questions, once again, have we met the criteria? I believe we have. We have not received any indication whatsoever that we do not meet the criteria. I would tend to say we're going through the administrative work of providing all the information, going through their verification of that information, and just going through all of the steps required to get what is a substantial refund from the government. But to date, we're very confident. We haven't seen anything that would question our ability to get that refund. On the second question, not being on the board, that is a request from myself to the board of directors. I have been CEO of public companies in the past, and I think there is a better separation of power. The CEO is always present at all board meetings, whether he is a member of the board or not. So the initial approach we wanted to take, subject or following my request, is when they asked me to replace the previous CEO, I said yes, and for the moment declined to be a member of the board. That may change in the future.
Thank you for the answers, and I look forward to the next quarterly CC, which again I believe is a very important thing. Thanks, Glenn.
Thank you.
Your next question is from Luisa Moreno with Euro Pacific.
Good morning, Glenn and Jacques.
Morning.
Just a few quick questions. First, in the financials. Jacques, I wonder if you could help us understand what is your current burn rate. So I noticed your G&A for 2013 was $8.4 million. In the fourth quarter, whatever, it was about 1.1, which indicates that if you stay at this rate, your G&A could potentially be less than $5 million. Can you and also I noticed that your research and development is around $1 million. So if you could comment about where your G&A is and potentially a forecast for 2014, as well as the research and development expenses.
Luisa, the question was aimed at Jacques. I will take a first stab at it because, as Jacques will indicate to you, that is something that I have been following quite closely since I joined Orbite.
Fair enough.
Our burn rate for HPA, SGA, and R&D together, excluding our interest cost on the debenture, which is $2 million a year, in quarter four was $650,000. Compared to the average cost for the full year of $1 million per quarter. So a reduction of about 35% for all of those costs, HPA operating costs, selling and general administrative, and R&D. Now, we expect the HPA cost to start ramping back up as we drive towards getting ready for production and rehiring or hiring the operating personnel and putting them into place. Jacques, do you want to answer in more detail?
Yeah, and as for research and development, we also expect that this level will increase in 2014 as, of course, you know, the research laboratory in Laval is there to support the HPA activities. So we expect to see a ramp up also in R&D, but not significant. It could be in the range of 15%. But as you know, we've reduced considerably these expenses compared to last year as well.
Mm-hmm, mm-hmm. So I don't understand, Jacques, why you are not able to capitalize the HPA expenses during commissioning.
Some of those will, Luisa, this is Glenn, some of them will be capitalized and some of them are, because we have a plant that is in limited operation, operating intermittently. We cannot capitalize all of those costs as we are between two phases of construction. But some of those costs will be able to be capitalized and will be during 2014.
Okay. So again, just the right question here in the burn rate, excluding capital expenditures, what is your estimated burn rate, cash burn rate per month for this year, average?
For the coming months?
Yes.
Well, this should increase to about, I would say, 850,000 a month, roughly.
Okay. All right. So that's good. My second question is capital costs. So I understand that your original estimates were $28 million. For HPA, so there's no changes around that. So it's still the $28 million capital expenditures for this year.
Yes, this is the same objective that we have to, and this is the same budget we have.
Just one clarification: the budget is 28.5, of which 2.5 has already been incurred and booked in 2013. So the difference is the budget for 2014, Luisa. So 26 million, if I'm subtracting correctly.
And what would be the working capital for that for this year?
Well, our working capital, we during the construction phase, we intend to keep it the way it is now. So of course, as we add cash through the financing, our working capital should increase a bit, but as you know, we will use that cash also for the construction. So we expect to keep a good working capital ratio going forward.
Okay. I'm almost done here. I just wanted to know as well regarding your the calcinator. So you said, Glenn, that Autotech has been chosen as the contractor. I was just a bit confused because in your press release, when you sort of describe the project management and indicate that detail engineering has been completed, it was originally for May, and then the procurement and construction packages for bid, you already picked Autotech for that, or there's some other contractors that need to be involved?
Yeah, a couple clarifications. Detailed engineering will be completed in May. It's not completed yet.
Oh, okay.
It was originally forecast to be completed in June, and we've moved that up by 1 month.
Okay,
the design review has been completed, which is a more general level of engineering. Definitely Autotech will be working with us to finalize the detailed engineering of their unit, and that once again should be completed by May, so they can start fabricating to deliver in August, as we have stated. And I think your next question was relative to the bid packages?
Yes.
Yes, they will be going out in June. Normally the biggest bid package would be for, I'd say, the general construction, but if we have, and we will have, some small fabrication that can be done, that will all be finalized and sent out in, we don't have the final number yet of bid packages, but all of the work will be pre-bid or bid on a competitive basis.
All right, so just one last question I'll get out, and that's regarding potential offtakes. So you are, during commissioning, you are producing effectively and you're sending samples. Can you give us an idea how many companies are you talking to, and how much will be produced this year?
Well, I'll give you some indication of what we're just in the process of producing. We will be producing 400 to 500 kilograms of HPA with the very limited run that we're just doing right now, which will give us more than enough in terms of initial samples to send back out. I want to be clear here, we did engage with 26 customers. They, as you have seen, are delayed in delivering an HPA facility. So we are re-engaging with them, having to start, I wouldn't say from scratch, but having to re-ascertain our credibility. I think that's going very well. So all of that process is sending new samples, meeting with them face-to-face. We have also retained the services of a specialist in the HPA markets that is guiding us towards new customers and other applications that we may not have seen. So Q1 is, if I can summarize, re-engaging with our customers and potential customers. Q2 definitely will be sending some samples and meeting with those customers face-to-face. And we expect Q3 and Q4 to be the negotiating part of the year, with the goal to be signing some offtake contracts in Q4 of this year.
Okay, thank you.
There are no further questions at this time. I will turn the call back over to the presenters for closing remarks.
Okay. Well, this seems to be all of the questions. We'd like to thank everyone, starting with the operator, the shareholders and analysts who are online, for participating on the call today. We look very much forward to reporting on our progress and doing a conference call quarterly. Once again, we thank you very much, and we wish you all a nice day. Merci beaucoup.
This concludes today's conference call. You may now disconnect.